Hello everyone, welcome to How to Do Basic. In this video, we will see about salary, PF and EPF. The salary an employee receives comprises of basic salary, DA which is dearness allowance, LTA which is leave and travel allowance, HRA which is house rent allowance, medical allowance, special allowance and other allowances. PF is a part of salary which is managed by the government as a mandatory retirement savings. An employee gives a portion of his or her salary to the Provident Fund, which is a minimum of 12% of basic pay and dearness allowance combined. This amount is settled in the respective employee's PF account, or you can say EPF account. A more positive note for employees is that his or her employer also makes a contribution on his behalf, which is 12%. Now let's do the math. If your basic salary is 30,000 per month, then employee share of 12% would make it 3,600 rupees. This is directed solely to the EPF account. The employer share of 12% is split into two, 3.67% and 8.33%. The 3.67% is directed towards EPF account and 8.33% is directed towards EPS account. EPS stands for Employees Pension Scheme. Just like your savings, EPF amount also adds interest. This changes every year. For the financial year of 2019 to 2020, the EPF interest rate is 8.5%. You will get interest only for EPF amount and not for EPS. So that means employee share of 12% plus employer share of 3.67% gets interest. Let us see an example. Assume that your EPF is registered by your employer on the 1st of April. So for the month of April, it will be 0. The EPF would be 3,600, which is 12% of your share, and 1,101, which is 3.67% of your employer's share. And the interest for the month of April will be added in May. Therefore, at the month of May, the EPF would be 3,600, which is 12% of your share, and 1,101, which is 3.67% of your employer's share, plus 8.5% of EPF amount divided by 12 months of the year. This equals 3,600 plus 1,101 plus 400 by 12, which equals 4,735 rupees. Therefore, by the end of May, EPF will be 4,701 plus 4,735. which equals 9,436 rupees. So for the month of June, the interest will be 8.5% of 9,436 rupees divided by 12 months. So EPF would total it to an amount of 3,600 plus 1,101 plus 802 by 12, which is 4,768 rupees. Thus, the gross EPF since the months of April, May and June would total to an amount of 9,436 rupees. This is how it gets accumulated over months. Benefits of EPF includes addition of regular interest at a fixed rate. The interest rate is regulated by the government and is revised regularly. Employees can avail this money during their pension age, mostly after 58 years of age, or they can also avail it if they are unemployed for 2 or more months. Employees can also withdraw the amount from EPF after 5 years of service for needs such as buying a house, repaying the house loan, higher education for children, etc. There is no tax on the EPF amount earned. Benefits of EPS includes mandatory pension if the monthly basic salary plus DA is less than 15,000. Early pension can be availed after 50 years of age. Pension is paid throughout employee's lifetime and will be continued to be paid after his death until the registered nominee attains the age of 25. The formula to calculate pension would be as below. Average salary over the last 12 months multiplied by pensionable years, the whole divided by 70.